At times when you buy a company, your journey may be painful in the beginning. And then as your thesis starts to play out, you have this emotion inside of you, just want to cement the gain. What you need to be able to do is when you go through this painful part, is to zoom out and ask yourself, are my thesis still intact? And then when you are making money in a stock, approach it as if you are analyzing for the first time. What is this company worth? Look years out. What I learned from my wins and failures, and I would argue that I learned from both. In fact, a lot of times my wins and failures were the same stock, were the same investments. One investment that was win and failure at the same time, and it was very educational for me. We used to own a company called Electronic Arts that makes video games. And when we bought it, it was a very controversial buy. We bought it at 2011 and 2012. It was a very controversial purchase at the time because it was named as the worst company in America by Consumerist magazine 2 years in a row. And I think the year before that it was Philip Morris, and the year before that it was British Petroleum. So it was really hated stock. And when we bought it, we had a very good thesis. The thesis was very simple. There was a transition from kind of analog business to digital. People used to go to Best Buy, buy a DVD with a video game. At that point, we were transitioning from people doing this to actually downloading those games. Well, when you download this game, you don't have to give 1/3 of your money to Best Buy anymore. So it becomes, the margins of this business explode. Also, we were in the beginning of this iPhone revolution, the smartphone revolution. So the size of the gaming market was exploding too. Anyway, so I make this controversial decision at the time, buying this very hated company. As usually happens to a value investor, when you buy something hated, it gets halved. So so the next year, the stock price kind of like Chinese torture just declined every single day, and it gets halved. At some point, somewhere in between, I buy more, and then it declines more. And then maybe a year or 2 years later, whatever, a couple years later, the stock price doubles. I make a celebratory dance. I sell the stock because I just doubled my money. And then the stock price quadruples over the next 3 years. And then just in part, it quadruples for the right reasons. In other words, it doesn't just go up because it went from, I sold it at fair value and it just became overvalued. No, it went up because the earnings went up a lot. And the earnings went up a lot for the reasons I just mentioned. But the lesson was, I was so exhausted by the first part of the journey that when I doubled my money, I just wanted to feel like have a victory, and I wanted to cement my gains. Okay, and at that point, actually, my behavior was not actually even rational, because if I look at my thesis was just beginning to play out. Earnings just start to go up for the reasons I mentioned. I want to make it clear, I didn't learn that you should never sell. That's not the lesson here. The lesson is that at times when you buy a company, your journey may be painful in the beginning. And then as your thesis starts to play out, you have this emotion inside of you, just want to cement the gain, okay? And what you need to be able to do is when you go through this painful part, this kind of just zoom out and ask yourself, are my thesis still intact? Which they were. And then when you are making money in the stock, approach it as if you are analyzing for the first time, okay? And say, okay, what is this company worth, okay? Look years out. By the way, what you may find that the company is at fair value. If that's the case, sell it. To kind of reanalyze it again. What I found later in my life, that you would find many times that if your original thesis is, you bought a stock at 16, it's now at 30, and you thought it was 100. It gets to 30, and you just double your money, maybe the thing to do is to do nothing. That's both victory and mistake at the same time. Company where the ownership was very painful, like for the first 4 years of ownership. Another example where you can argue that it was a success and failure at the same time. It started as a failure and then was a success, is McKesson. We own McKesson. The first year of McKesson, it was torturous. McKesson is the largest distributor of pharmaceuticals in the United States. It has sales of $200 billion or something like this. So every third drug in the United States is delivered from manufacturer to pharmacy by them. And it's an incredible business. Originally, we bought it because it used to be this company that growth investors loved. And then the growth slowed down, and the stock literally declined probably 60%. And as it declined, value investors kind of did not follow it for a long time because it was kind of owned by growth investors. There was this gap. I find there's a transition from growth to value investors, kind of violent. And so that creates this significant decline in price. So that's when we bought it. But this is a company we probably owned 2 or 3 times before, or at least we owned somebody in that industry 2 or 3 times before. And then, so we owned it, our thesis started to play out, kind of business kind of is improving again. And now people are afraid that Amazon is going to go into pharmacy business, which it has. Except going to pharmacy business has nothing to do with competing with McKesson, because McKesson is a drug distributor. So it delivers pharmaceuticals to pharmacies. And my argument was that, to quote McKesson CEO, is that McKesson was the Amazon of drug distribution before Amazon. It's a very specialized business that has a lot of regulatory hurdles. There is no way Amazon could get into drug distribution business and be successful with that. So that was my thesis, and it again started to play out again. The earnings keep going up and the stock started to do well. Then there's a whole bunch of lawsuits filed against McKesson and drug industry in general about opioids. So it becomes a defendant in a lot of opioids lawsuits. And those lawsuits are idiotic. Not because people are dying from opioids, they are, and I'm very sorry for those people, but blaming drug distributors for people dying from overdose, it's just like blaming a company that delivers cigarettes from Philip Morris to 7-Eleven, a trucking company, from people dying from smoking. One has nothing to do with another. So again, the stock declines a bunch. And we kind of look at this and we try to guesstimate that even in the worst case, the company is so cheap that we're unlikely to lose money. Then those lawsuits get settled. And I think the drug distributors just settled them just because it was just cheaper to pay the money than to fight them. I don't think they were in the wrong, but I think just they figured it's just easier to pay the money and just forget about it. And that's what they did. And then the stock triples a bit, the next year. So just think about this. We own the stock for 3 or 4 years and go through this tremendous roller coaster. And the market produces no returns. And then we get all the returns in 1 year. Okay, so I think the lesson from that was the reason we did not give up and sold the company when we were going through this roller coaster, because we understood the business very well. Because it was very, it's a high quality business, very transparent, run by good management. So that allowed us to hang on to the stock. And by the way, I can tell a similar story when we own a Qualcomm stock. It's kind of it's the same story in the sense we had 3 or 4 painful years of this kind of roller coaster. As Qualcomm the suppliers did not pay it, was chosen by Chinese government, by South Korean government. It had a lawsuit with Apple, and I'm missing something in between. It had all the similar characteristics to McKesson, and then we got 3 or 4 years of return in 1 year. I think what's important about these stories, and I think it's as an investor it's important to go through them, is that they teach you that at times it's okay to be stubborn when you think the company is undervalued, or you think the issues are temporarily. Going through these experiences, create this frame of reference, because every single time in my portfolio I have something like that. You buy a company and bad things happen to it, but you think the company is still significantly undervalued, okay? So the short-term story might have changed, but long-term story hasn't. I guess the lesson I learned from this is that maybe there's another way to look at it. I keep coming back to this because this is kind of at the 101 of investing. The value of any asset is the present value of its future cash flows, okay? Short-term issues, a lot of times they're the most visible because they happen to you in the short term, in the immediate term, but the long-term cash flows may not have changed. And if that's the case, the thing to do is to do nothing, or sometimes maybe even to buy more stock. But this is what I learned from painful experiences of my mistakes and painful experiences.